Welcome to Cheddar Rides, everyone, our weekly show that covers all the changes in transportation and the future of getting from here to there. I'm Nora Ali.
And I'm Brad Smith. Thanks so much for joining us here today.
And today we're looking back on that fateful moment last August when Tesla CEO Elon Musk tweeted he might take the company private, and everything for the company changed. Our own Hope King, who is on assignment today, has more on the last year in Tesla.
Was already very little Elon Musk could do to shock the world, but on this day, exactly 1 year ago, Musk tweeted the only two sentences he may ever regret typing, or at least be most remembered for, and that is, am considering taking Tesla private at $420, funding secured. From then on, Musk and Tesla were thrown into a new arena with regulators, challenges that distracted the company from hitting operating goals and distracting investors. I mean, just look at how the stock has moved since. We're going to go through all of that. Regulators, of course, looked into the tweet immediately. They wanted to know whether Musk was truthful in saying he had secured funding. After all, it would have been the largest ever corporate buyout. Well, he wasn't. And on September 27th, the SEC charges Musk and Tesla with securities fraud for the misleading tweet. A surprising settlement came quickly. Many thought Musk would fight it and risk getting kicked out of the company, but just 2 days later, Musk agreed to step down as chairman and pay a $20 million fine. He, of course, got to stay on as CEO, and Tesla also had to pay $20 million and put additional controls and procedures to oversee Elon's communications on Twitter. But it is important to note that because he settled, Musk neither admitted to nor denied misleading investors. So let's fast forward now to December 9th, and that's when Elon Musk sits down with 60 Minutes, and despite everything that's happened so far, admits he does not respect the SEC. Remember this?
I want to be clear. I do not respect the SEC. I do not respect them.
But you're abiding by the settlement, aren't you?
Because I respect the justice system.
Because he respects the justice system. Well, not so much, because in February of this year, he does it again, tweeting, quote, Tesla made 0 cars in 2011, but will make around 500,000 in 2019. Only to clarify later, he actually meant to say annualized production rate at the end of 2019, probably around 500,000 deliveries. For the year, though, estimated to be about 400,000. Well, unsurprisingly, the SEC wasn't having it and asked the court to hold the CEO in contempt for violating the settlement, the first settlement. And I say the first because this second little oopsie led to another one in April when Musk agreed that a company lawyer will approve all his tweets moving forward. And if you think that's the end of the story, that he learned his lesson, well, no. Alas, because just weeks ago, Musk tweeted previously undisclosed solar roof production numbers, and that was posted just about a week shy of this August 7th anniversary, which leads me to believe it may not be the last one remembered this infamous date in Tesla and Musk's legacy.
What a year. That was our very own Hope King breaking that down for us.
What a year indeed. Continuing on the Tesla timeline, though, we're taking a deeper look into the highs and the lows for the electric car maker over the last 12 months. A year marked by lawsuits, executive shakeups, and of course, innovation as well. Joining us now is Sean O'Kane, transportation reporter at The Verge. Sean, thanks so much for joining us here today.
Thanks for having me.
Happy 420 tweet day, perhaps? I don't know. Do you think Musk regrets typing out those infamous 60 characters 1 year ago?
I mean, it's really hard to put sort of meaning behind the actions that he takes sometimes. I think he was going to be in a battle with the SEC regardless. I mean, one of the whole reasons for him doing this in the first place was to try and distance himself from the sort of money cops coming to the door of Tesla. And so, you know, even if he hadn't sent that tweet, he would have found another way to tussle with them until he wound up trying to take the company private some other method.
And that's not the only thing that has caused some raised eyebrows for the company, also the executive departure. So let's just talk about that. Most recently, Musk announcing the CTO, JB Straubel will be stepping down from this role. Just how notable are all of these exits, and what has it done to really change the perception of the company?
I mean, it certainly changes the perception of the company because it just, you know, it never looks good when you have a bunch of executives, VP level and much higher, leaving the company sort of week after week, month after month. And we had 2 earnings calls this year where a C-suite executive left the company and announced that suddenly on an earnings call that they were leaving the company. And so, you know, the JB Straubel one, I think, is probably the one that people are keying in on a little bit more. Deepak Ahuja, who was their CFO, had left the company before, and that didn't seem to be much of a problem. They have financial issues regardless of whether or not he was there. But JB Straubel's a guy that's been around essentially since the beginning. They kind of retconned him into the co-founder role, even though he came in with Musk after the company was founded. But he had a lot of fingers deep in the technological side of this company. And so not having him around is definitely going to change things. One thing that's really interesting about what's happened with all these executive departures, though, is that Tesla basically stopped its practice of making big hires from outside the company. A couple years ago, we were hearing Tesla hired this Apple executive, Tesla hired this Ford executive.
Right.
We don't hear that anymore. They're basically just promoting from within the ranks. And so either they're doing something really well to train these people to take over their first C-suite positions, or some critics of the company see that as a sign of sort of patching over problems.
One certain thing that you can't talk about Tesla without at least giving them credit for the way that they've sold cars, sold vehicles, and really disrupting the way in which people thinking about where they can buy cars, whether that's online or whether that's through some of these untraditional footprints that they've set up. Now, the strategy has changed. What do you make of them, the pulling back that we've seen over the past year of a lot of those store closures and shifting solely to rely a lot on how they are able to drive their web presence and use their web presence to drive sales?
I mean, if you've ever bought a car, I think we could all enjoy a process that's a little bit easier. And I don't think anybody really loves going to the dealerships when they're buying a car or maintaining a car that they've bought. So I appreciate them trying to disrupt that. I mean,
is it enough to convert some of the other high-value, high-cost consumers that are out there, or even the mass model ones?
I could see that. I mean, I could see someone who has the disposable income you need to buy a Tesla appreciating the fact that they could just do it from their own home, or maybe even in the bathroom, like just a couple taps on their phone. I mean, like, that seems pretty convenient for people who have the money to make that decision that sort of capriciously. And I think other automakers, like they've done with touchscreens in the car or with electric drivetrains, like they could probably take some example from Tesla and try to make that process a little bit easier. Again, I think some process in making a $30,000, $40,000 purchase is probably a good thing. I would like to jump over maybe like 1 or 2 hurdles, but.
Before we get to some of the highs for Tesla, I do want to mention some news from this week. The cease and desist letter, of course, of the Model 3 from the NHTSA regarding Model 3 safety claims. They subpoenaed Tesla for information on several crashes. How much does this hurt Tesla's reputation?
I mean, I don't think this is as much of a problem as some of the other problems they've run into. Tesla has a very famous, pugnacious relationship with the regulators in this country, specifically NHTSA and also the National Transportation Safety Board. They've done something like this before where they've been caught out by NHTSA saying, like, what you're saying about the safety of your cars is not realistic and doesn't adhere to our guidelines. So they've actually done this before. I think the most troublesome thing, I guess you could say, in this news from this week is not necessarily that NHTSA sent a cease and desist letter, it's that they referred the matter to the FTC. They said, this is a repeat pattern now, you've done this before, we're worried about how you're taking liberties with our guidelines, and so we're going to refer this to the Federal Trade Commission. We're going to say, you should investigate this because these could be bad practices for consumers. And whether or not the FTC opened that investigation, we're not sure. They never got back to us today. If that investigation is still open, there's a lot that's still up in the air. But it's a pretty good money these days that whatever 3-letter agency you're talking about probably has an investigation open into Tesla. So,
well, NHTSA, that's a 5.
And they're a 5-letter one too. So yeah, all the letters, all the acronyms.
Anyway, shifting gears to some of the highs as well out there, and some of the must-haves for continued growth. Gigafactory in China, particularly. The Gigafactory 3 in China seems to be coming along. The company releasing a new drone video most recently as well, showing structures popping up. Is this factory the key part of the equation to see revitalized growth in China for Tesla?
I think the answer to that question got a little bit muddier in the 6 months or 7 months that we've gone through so far this year, 8 months, oh my God. Because the opportunity in China for electric cars is enormous. It's the biggest electric car market in the world. It's supposed to grow bigger than any other market over the next 10 or 15 years. But we've seen a big slowdown in China, not just in their vehicle sales, which was sort of the story at the beginning of the year, but now in the economy, and we're seeing trust in some of their smaller banks start to deteriorate. And so what happens in China could actually really affect the possibilities for Tesla there and the opportunities for them. But even that said, even a diminished opportunity in China is still a pretty big one, and just the ability to locally manufacture the cars there is huge. And to get around the tariffs, to get around the trade war that keeps changing every month, minute, whatever, being able to make the cars there and sell them would be a big deal. It's going to be a matter of, a bulk of those big number sales we see in China for electric vehicles come from lower sticker price cars with lower range. So is Tesla going to be able to find a market that's in that sort of like mid to like low tier luxury side of things? It's kind of tough. NIO's had a lot of trouble, and they're a national company there, with a lot of help from the state, not necessarily state owned. So there's a ton of opportunity for them, and to get as far as they've gotten in the Chinese Gigafactory so far as we can tell, is a big deal, because if they could get production going by the end of this year, it could certainly help the company's overall numbers in 2019.
Well, we've only just scratched the surface, but we're going to have to leave it there. Sean O'Kane is a transportation reporter at The Verge. Sean, thanks so much for your time.
Thanks, guys.
And coming up, after the success of its 9th space mission this year, SpaceX is getting into ride sharing. That on the other side. Stick around. You're watching Cheddar Rides. Oh yeah, welcome back to Cheddar Rides, everyone. It's a big week in ride sharing, especially as Lyft reports earnings after the bell today, followed by Uber on Thursday, Friday's Eve, as you may know it. Their second quarterly results as public companies since going public in March and May, respectively. Both ride-hailing companies and competitors are trading well below their IPO prices. Stick with us. Next hour, we'll have live coverage of Lyft's earnings in closing bell.
Yes, that's right. And speaking of Uber, they're making moves to get into the public transportation sector. The ride-hailing company is expanding its experimental program to incorporate buying train tickets on the app. Uber has teamed up with cities and transit agencies in the U.S., Canada, Britain, and Australia, providing access to tickets, transport people with disabilities, and has even substituted for a town's public transportation system. It's an important move for the company as it seeks new growth. Well, let's continue on here on the Tesla beat. Elon Musk's SpaceX successfully launched its 9th space mission of the year yesterday. The Falcon 9 rocket blasted off, carrying a $161 million satellite called Amos 17. Was built by Boeing. Joining us now is Tim Fernholz, senior reporter at Quartz. Tim, thanks for joining us here today. So why was the success of this specific launch so important?
Well, this launch was a pretty routine one, actually. One big satellite goes up, all very successful. 10th launch of the year for SpaceX, more than any of their competitors. So in terms of what actually happened, it's just business as usual, but there's some symbolism behind this launch because it was a freebie to make up for an accident that SpaceX suffered in 2016.
And so explain that a little bit more for us, because the services that the Amos 17 satellite is going to provide, what are they and what is the significance of those?
So this is a communications satellite. It's owned by the Israeli company Spacecom. It's going to be launched into space and primarily provide service for Africa. So that's going to be perhaps broadband internet access from space, broadcast TV, satellite, phone service. All of those things can be done with this satellite, and it's going to be a major increase in connectivity for Africa, the Middle East, and the areas the satellite covers. This was, like I said, a freebie, a makeup launch from a 2016 accident. The same company, Spacecom, wanted to launch another Amos satellite, Amos 6, but it was destroyed when a SpaceX rocket blew up while doing a pre-flight test. It was a big black eye for SpaceX and Elon Musk, but it was also a milestone that helped the company learn and become more effective.
Yes, a milestone and a learning point indeed. What was the cost of that failure, though? It must have been really detrimental to the company.
It would have been a lot of money. We don't know exactly. SpaceX is privately held. The good news is Spacecom's satellite was insured by Lloyd's of London, so they were able to make good on that, but it did screw up a merger plan they had with a Chinese company. In 2016, SpaceX had several months, about 6 months of delays because of the accident. It likely cost them hundreds of millions of dollars in revenues and in redesigning the fuel system to make sure that same mishap didn't happen again.
How has SpaceX improved since the failed Amos 6 mission?
Well, actually, it wasn't a mission. It was a pre-flight test that went wrong. But what happened is SpaceX essentially redesigned the fuel tanks it uses to pressurize its rocket. It had been using a fuel tank called a COPV, a carbon overwrap pressure vessel. And in that case, during fueling, there was a big chemical reaction between liquid oxygen and carbon that caused an unexpected explosion. SpaceX had just not understood what would happen when super chilled oxygen encountered its tanks. So they had to go to work with NASA. They did a lot of tests. They blew up a lot of those tanks to figure out what went wrong. And now they have a redesigned system they've been flying. And it's very important for NASA because NASA wants to put astronauts on these rockets. So they have to be safe enough for humans.
And it seems like this Amos 6 test was really high visibility, high profile, given even Facebook had a stake in the launch as well. Mark Zuckerberg at the time said, "I'm deeply disappointed to hear that SpaceX's launch failure destroyed our satellite that would have provided connectivity to so many entrepreneurs and everyone else across the continent." So does this new mission maybe make up for the lost confidence from the failed test for Amos 6?
In a sense, it does, but you have to realize that since that accident, SpaceX has flown now 46 successful missions. And it's really that 46 mission success rate that says, okay, this is something that works now. So while it's nice to see this particular flight go, I think everybody was a little more nervous when they returned to flight right after that accident. You know, now SpaceX has a pedigree as one of the most reliable rocket makers in the world.
And so with that pedigree, what do you expect the appetite for some of the government agencies to partner more with SpaceX might be at this time? What are some of the big projects that you're particularly looking out for coming down the pipeline?
Well, two big things. One is commercial crew. Like I mentioned, NASA wants SpaceX to fly astronauts to the International Space Station. They're hoping to do that as soon as early 2020. That's going to be a big test because no one takes anything more seriously than astronauts in terms of their safety. But for business reasons, SpaceX right now is competing for the U.S. Air Force's next big set of launch contracts. It's going head-to-head with the Lockheed-Boeing joint venture, United Launch Alliance, Jeff Bezos' Blue Origin, and Northrop Grumman as it competes for those contracts. This is tens of billions of dollars over the next several years, and it's going to be a real classic, battle in the halls of Congress, lobbyists everywhere, and it's really going to shape the future of the space industry in this country going forward if the U.S. Air Force decides to not pick SpaceX, to pick traditional contractors, if they pick Bezos over Musk, if they pick, any of these combinations will shape how we go into space for the next decade.
What do we know about this small sat rideshare program that was recently announced? Small satellite operators able to book a spot on those regularly scheduled Falcon 9 launches. What's the significance there?
Well, it's showing that SpaceX is looking at all aspects of the market when it wants to compete. Most of its business is launching one big satellite at a time, like the Amos 17 mission yesterday, but it also has done rideshare missions when it can launch tens, dozens, as many as 70 or 80 small satellites at once. Now that it has done this a couple times, it's saying it's going to make this a dedicated part of its offering. A big complaint from small satellite companies when it comes to SpaceX is that they're the secondary cargo. They get bumped, their schedules get screwed over, and so you have a startup that is waiting to go into business and its funding is running out. By saying, look, we're going to do these on schedule regularly and at $15,000 a kilogram, which is very low in space terms, SpaceX is laying down a marker and saying, this is sort of the floor for getting access to space. And every other company is going to have to make sure that it's either more competitive on price or on service than SpaceX. So it's a big marker in the industry, I think.
Do you think they're set on cash capital that they might need to really either, launch some of these tests that they're doing this year, next year, whatever the timeline is for some of those launches? Or are they really kind of in need of potentially needing to search out more sources of capital? How well funded are they right now?
SpaceX is pretty well funded as far as we know. They've been raising money this year. They've had several rounds. We're all sort of deducing this from regulatory filings. They haven't come forward as a company and said, this is how much we've raised. But they are doing well. They've raised several $100 million. We know that they don't have much debt. We know that they have significant revenue from their launch business. So it's not a cash burn worry, really, except that SpaceX has two huge, ambitious projects that it's doing. One, SpaceX is trying to launch a 12,000 satellite internet constellation. That's going to cost billions and billions of dollars, and it's likely that to realize that vision, SpaceX is going to have to raise more money. SpaceX is also developing a new rocket called Starship. You maybe have seen images of this stainless steel kind of water tank with legs in Boca Chica, Texas. Building a new rocket is very expensive, and so that is one reason why these U.S. Air Force contracts are so important to SpaceX. They need to win those to get the money to keep building their business.
All right, we're going to be watching that very closely. Very Star Trek-y reference there with the Starship name, but hey, it wouldn't be Elon Musk's company if it wasn't, right?
No, the name's only going to get sillier. I'm sure he'll change it again.
Thanks so much for joining us today, Tim Fernholz, senior reporter at Quartz. Great stuff.
All right, coming up, we'll talk to one of the unsung heroes cleaning up the streets of abandoned scooters in San Diego. Scoot Scoop is after the break. Welcome back to Cheddar Rides, everyone.
San Diego officials say there are about 23,000 dockless rideshare scooters in the city of 1.4 million people. That's one scooter for every 60 San Diego residents. How about that? That's where Scoot Scoop comes in. They're unsung heroes of the scooter epidemic, a 24/7 free scooter removal company. And joining us now is Dan Borelli, who is the co-founder of Scoot Scoop. Wow, that's a lot of scooters you got behind you, Dan. What was your inspiration?
How you guys doing?
Yeah, we're good. What was your inspiration for the idea behind Scoot Scoop?
It just came to us basically from a need in the community where we found a lot of businesses, property owners were fed up with having this crap all over their yards. And, you know, we, in their businesses, you know, the liability for these guys is really high when, you know, you're operating a business.
Okay, we're going to try and get Dan back, but very fascinating company, Scoot Scoop.
Scoot Scoop.
That is trying to clean up what is ultimately, you know, a homeless flock of scooters out there.
Scooters, that is so sad.
Yeah.
A lot of San Diego residents have been very vocal about the mess as well. Okay, we'll get Dan back in a moment, but in the meantime, self-driving startup Optimus Ride will be the first commercial self-driving service to operate in the state of New York. They'll offer shuttle services within the Brooklyn Navy Yard 7 days a week for free. For more on that, we'll hear from Nicole Ryan at News 12.
How does it know when to brake?
So we're using all the sensors, things like the LiDARs, the cameras, and other sensors on board to sense the environment, interpret, and also pick up different objects, different vehicles, different pedestrians and all. And so it's using all that information to sense, okay, how does it navigate the space? How do we get us to our destination?
And the destination is here at the Brooklyn Navy Yard. Starting tomorrow, 6 self-driving vehicles that seat 4 by Optimus Ride will ferry passengers between that New York City ferry stop and the Brooklyn Navy Yard's entrance at Cumberland Gate on Flushing Avenue.
So we came to a full stop here, kind of inch forward, make sure it's fully clear.
Listen, we were fortunate enough to get New York City ferry service in May. And actually ferry ridership has been through the roof and we're really excited about it. But it is quite a walk from this ferry landing all the way back to the street network to Flushing Avenue. So this is a great practical use of a last mile autonomous vehicle.
The vehicle is going 15 miles per hour, which is the speed limit.
CEO of Optimus Ride, Dr. Ryan Chin, says right now there will be a test driver who watches and observes for safety. And
the other person is a software operator. They sit in the passenger front seat. They have a laptop and they observe what the vehicle sees and what the vehicle thinks and what the vehicle thinks other people are going to do.
Now, the Brooklyn Navy Yard is a 300-acre industrial park with manufacturing businesses and thousands of employees. The self-driving vehicles will run on a continuous loop between 7 a.m. and 10:30 p.m. Reporting from the Brooklyn Navy Yard, Nicole Ryan, News 12.
And that, my friends, will do it for this week's episode of Cheddar Rides.
We'll be back next Wednesday, 3 p.m. with our next show. Don't go anywhere, though, because Closing Bell continues after the break.
Don't go anywhere, Brad.
Those any-theres, they'll sneak up on you.